Ian, welcome to The Art of Boring.
Thanks, Rob.
I should say welcome back. We've done this before, and you just came back from a research trip to Japan. And as our team often does, part of what we like to do when we've done some research is share it with the broader group. And so your note, as I read it, began with the following sentence. The more unique the culture, the greater the importance of visiting in person and taking the time to wander and to think. So to start, can you just unpack that statement a little bit more for us?
Yeah, for sure. Because Japan is very unique. I think in all the countries I cover, it's probably the most unique. It's an island, very specific culture, very specific ways of doing things and priorities. And I think often, we see from our seat in, say, Calgary in Canada, like we see the headlines, we see statistics, numbers. They give you a good story, but not always the full story. So going there, talking to people, seeing what's happening on the ground, what do people really care about, what's changing, what isn't changing, and trying to get a lot of perspective. So you talk to the companies, talk to analysts, talk to your cab drivers, other people you meet on the street or at the restaurants. Yeah, just trying to really put the mosaic. And I think always with traveling too, it's part of the kind of creative process, creative inspiration, getting out there, seeing what ideas bubble up, connections you can make. That all helps with it. And I think Japan specifically, it's a good one to prioritize because it can be so different.
You mentioned a little bit of it, but Ian, you have quite a formidable beard for those who are watching the video of this podcast. I think Socrates did too. And when the expression to wander, to think evokes images of Socrates. What does that actually mean to you, to wander and to think?
Yeah, maybe I become a little more philosophical with the beard. Yeah, hard to know. I think for me, it's to have time to think. So we get busy. We're in the day-to-day headlines, doing tasks, and end of the day, like our job, there's a lot of work. The amount of content we can go through never ends. But our job is about making good decisions. It's about coming up with insights that aren't obvious and putting disparate information together, finding patterns. So how you go about that, it could be at your desk, staring at a screen all day. It could be in a park. It could be traveling, airplanes, taxi cabs, meeting with people, companies, and seeing where you end up. I think it's one of those things where it's hard to put, how did you get there? How do you connect all the dots on the way there? It's hard to do it, but it's kind of with intuition, how you arrive at a decision. And that's part of it, the process for us.
And I think to your earlier point, it's not just about talking to management teams and the site tours, but, speaking to the people, getting a real sense for the flavor of the place. One of the insights that you came back with was just on this concept of surplus and deficit and how it applies to Japan.
Yeah. And when I think of surplus and deficit, a business that creates a lot of surplus is awesome. They can apply a surplus in different ways. And you could use stakeholder management of who gets a surplus kind of down the chain. Japanese companies produce a lot of surplus. It's just the way it's kind of been distributed isn't not totally equal and different than kind of what we'd be used to with a lot of the more Western-oriented companies. In particular, I think customers do really well. There's a lot of customer surplus across quality, price, super dedicated service. Employees do really well in terms of lifetime employment and really high loyalty between their employer and the employee. And suppliers, long-term supplier relationships, long relationships generally is a key theme. And the society at large. Companies think about society, doing what's best for society, thinking long-term, not just for themselves, but also for the broader society. And the last one on that might be shareholders, which in some cases done very well, in other ways not quite as high as it should be on the ladder. And in some cases that's getting kind of equalized out. And others, there's probably more room to go or might not happen in the same way we're used to. But it's good to just kind of go there, experience the surplus or deficits, talk to the companies and see where their priorities are, where they want to go.
To just translate that into the more parlance a little bit. So you're saying that there are many businesses in Japan that create wealth per se. It's just maybe not the shareholders that are the beneficiaries of that wealth. It might be other parts of society and the culture that actually get those benefits. Is that right?
Yeah, customers can do really well, really high quality products, incredibly dedicated service. And that's one thing across Japan is the employees, how dedicated they are to what they're doing, partially because they're there throughout their careers, but that they've developed. And the value. I think in the US, you often find hidden fees. I'd say in Japan, there's often freebies. I was surprised what was included in the price.
Hidden freebies.
So it's a nice surprise as a customer. I don't think maybe once I was kind of surprised I had an upcharge or something I wasn't expecting, but really, a really great customer experience. I think that's why tourism in Japan is taking off. And that'd be the customer side. I think too, if you look at the income statement kind of with employees, it is often still lifers in terms of staying there their whole careers. But employers are dedicated too. They don't fire people in the downturns. They'll keep them throughout their careers. And the good side is you have a lot of retained benefits, a lot of learning. When you don't have to retrain people every 2 years, you can kind of have retained learnings and really deep skill sets in niche manufacturing technologies and other areas that you just wouldn't get when you're constantly churning through employees. The downside is just the cost structure is not as flexible in a downturn, and you don't have quite the creative destruction in the US. Lots of boom, lots of busts, lots of companies make it, lots go bankrupt. But that can create a good vitality that in Japan, it is harder to hire mid-career. And if you and I were going to try and do a startup in Japan and hire people, it'd be difficult. The university students want a stable career, so often go to the more traditional employers, and people don't want to leave mid-career. So it's kind of chicken and egg there still.
It's been hard just preparing for this podcast not to draw too many comparisons between what we know about the US and the, large emphasis on shareholder returns, comparing with some of the observations that you had in Japan, one of which was just the way that businesses are optimized. And I know you spoke about that a little bit. I mean, it sounds like from a visitor perspective, it's fantastic that there are lots of freebies. What does that look like from a corporate perspective?
Yeah, I think in Japan, when you think of the shareholder side, you've seen cash often in relatively inefficient balance sheets, which does provide a lot of downside protection. You can't go back; it's hard to go bankrupt when you have a lot of cash, but it kind of limits the upside and often just doesn't make a lot of good sense. Lower payouts of that cash, and also just less of a focus on returns. I think the Japan Stock Exchange has basically for the last 12 years focused on trying to get or companies to become more efficient and more shareholder friendly. In a lot of ways they have, but I think there's still, you see some of the best companies have the best businesses. They don't need to allocate the cash because they have a great core business. They're already making a 12% ROE. And to go to 40%, they don't have a lot of interest. So you've seen some of the more low quality companies start to do that. I think as well, just in terms of pricing, I met with a company called Nippon Sanso. They're an industrial gases business, similar as an Air Liquide or a Linde. And really what they've been trying to do is just improve the profitability in Japan. They said it was difficult to get going. And with the war in Ukraine and all the inflation, it forced them and the whole industry to get going on that. And one interesting point as well was, to the point on freebies, was it's not just pure pricing. They've historically not charged for a lot of things. So they'll do weekend deliveries, evening deliveries, free training, letting you sit with an air cylinder for a long period of time. And now they're saying, hey, we're going to start charging for that stuff. And it's one thing with Japan too, it can move slowly. They have long-term relationships. They don't want to burn any bridges. So the good point here is the runway is really long. They said we've been at this several years and we're still early innings, and getting our salespeople to kind of push this through, getting customers to accept it. So we've seen nice improvement. There's probably a good way to go as well. A good example as well that contrasts well with the US is just Oriental Land Management. They own Tokyo Disney and Disney Sea. So really large land holding within Tokyo, really good assets. And the price is about a third of what you pay in Orlando. So talking to the company, they have raised price a little bit, and they started doing dynamic pricing just in 2020. So charging more on the weekend than on a weekday. And they're still trying to I was pushing them on just understanding how far could they go with this. And they're interested in raising price. They see there's a lot of customer surplus, but they also said, hey, society needs to get value to this. We want this to be accessible to the local populations. And meeting with analysts actually covering a totally different sector, I asked him kind of about Disney. He said, oh yeah, as a kid, we go every year. It's really common. And it's kind of a rite of passage. So it's something that's broadly accessible, and they'll probably keep it that way. So there's always opportunity to charge more, to optimize more, quote unquote. But at the same time, it works pretty well for society. And the other example with them as well is they have a large land asset. Excess land might be about a quarter of the market cap. They've never sold any, but they did donate some to the city last year to build a fire station. So great in some ways, but different than what we're used to.
You could almost imagine, like a really binary version of what you're describing. So a particular culture that, just super optimizes for shareholder returns, really near-term focused. If I can squeeze pricing through, tomorrow, let me do it and just be as aggressive as possible to get the highest possible returns. And contrast that with a really long-term perspective, which may line up with what we're talking about in Japan, where just the social license to operate, the long-term value creation is just viewed through a much longer-term lens. Is that the right way to think about this experience that you had over there? Or we've heard a lot about over the last decade or so, just, hey, improvements in Japanese corporate governance. And I think your comment was, maybe we're in the early innings. But from your perspective, should there be more innings, or just how early are we in this process?
Yeah, it's a great question, Rob. And I love to stretch things to either extreme, because then you kind of think about it. And of course, there's no right answer. Japan works extremely well in a ton of ways. You don't see a lot of Japanese people leaving. They quite like it there. It makes sense. I think the starting point would be just, is there a surplus? It's a great problem to have. There's a wealth creating business, tons of surplus. Now, how do we allocate it? That's a great position to be in. The issue is when you deprioritize the shareholder side to the benefit of the others to too far of a degree, it can be hard to attract capital and spur growth. I think Japan has had that issue historically, and the reason why the stock exchange and the government is trying to kind of reallocate that a bit gradually is they want investors to be here. They want business to happen. They want startups to happen. And so they're kind of rejigging that a bit. It's great to have super loyal employees, but hey, if there's an amazing venture starting in your field and you're a leading person in that area, maybe you should go and join that. Maybe that would be more beneficial for the nation. And likewise, if a company's not making reasonable profits, maybe that makes them fragile in a downturn. Maybe that means they can't invest enough. And maybe if they could invest more, they'd be better for customers. So I think it's philosophical. It's important to be, and it's impossible to be precise somewhere, but I think either end is not a great situation to be, as probably both cultures have noticed.
In preparation for this podcast, I went back and listened to one of the very first Art of Boring episodes. I think it was episode 9, all about Japan with David Reagan. And it sounds like Dave's view from back then is quite similar to yours. It's not a lack of great business models in Japan, but just governance and the way capital is allocated that has been the main impediment for, finding as many opportunities in that market as they are today. In your view, what's changed since 2018 when that podcast was recorded to today? Has there been much progress, and where are you seeing it?
So what hasn't changed is there's still great businesses in Japan. They still produce great surplus. We are seeing improvement in some areas. Some companies like a Hitachi have really done big portfolio transformations. They said, hey, we're going to focus on areas that have good growth, that have good profitability. And we're very dispassionate on getting rid of areas that don't. I met with Hitachi and also Hitachi Machinery, one of their subsidiaries. And they're spinning out Hitachi Machinery. I asked the company, hey, why are you guys getting spun out? And they said, hey, we're too capital intensive. We're low return for Hitachi. They have better areas to invest in. So they're prioritizing those. Yeah, it makes a lot of sense. And that's been a really good story. I think as well, on the government side, sometimes they do the best thing. And even though if the incentives aren't perfect, they don't have, say, return on capital all through the compensation plan. They don't own necessarily a ton themselves. Often they do the right thing and they think really long term. So it's different ways of thinking of incentives and governance. I do think one thing I've noted is just companies getting into areas where their moat doesn't extend. They have a great core business, really high moat, but not a lot of growth. And often with Japan, given it's a declining domestic market, or at least population, they are looking outside for growth, and they have that incentive to try to find growth. So I've met with a lot of companies where great core business, going to areas where no moat. And that's kind of Dave's point on not great capital allocation, not great strategy in a lot of cases. But for bottom-up investors, we can look for the good cases, the best of Japan. Does this company's attributes really play well to Japan's strengths, and avoid the bad cases where, they're probably going to allocate capital poorly. Shareholders are not a priority. And the good thing is sometimes that's pretty obvious. They're pretty upfront and honest with you. So having these meetings and trying to create that understanding can be really useful.
What parts of the market during your travels there surprised you the most in terms of, hey, this has got a lot of potential? And I appreciate that, you're just fresh off this trip. You're still working through all the research that you've done. These may translate into future investment opportunities. But, kind of generically speaking, or thinking 10,000 feet up, what were you most excited about coming off of your trip?
I mean, digitalization is one big theme. Japan in some ways is very tech forward, but in a lot of ways actually lags, especially since 1990. And the opportunity to help companies, help governments digitalize is important. They have a labor shortage. They want to become more efficient. And one company, Nomura Research, talks about there's a long runway here. They have really good IT services to help companies do that. And my colleague, Josh Samuel, actually met with them a few weeks before I went. And he kind of noted that AI could be a really good opportunity. Because one concern with AI for IT services is it could be deflationary. But with Nomura Research, they actually have been labor constrained. They can only really grow as fast as they can add people. And in Japan, it's hard to add people mid-career. So an AI being a efficiency tool to automate a lot of tasks, they might be take on a lot more business now.
What I'm picturing here is just, like invoices being done manually versus electronically. Is that what we're talking about?
We're talking about that. We're talking about going to the cloud. Yeah, there've been a lot of slower digitalization, slower credit card uptake in some ways. You still need cash to go to certain ramen restaurants. And even the UI, I think if you're visiting Japan, the government's intake form for you, it takes a lot longer and is a lot harder to use than it should be.
So a historical lack of investment and a constraint on labor, which has just further exacerbated the problem, I can imagine.
That's it. But if I use the Hitachi example as well, they talk about, they have an IT services business that kind of goes across all divisions. And this is a global focus, not just Japan, but they try to upsell customers. They have deep relationships. So they kind of find ways that customers need to digitalize better and then kind of sell that to really different customer groups using that deep relationships that they have to start with.
Given your earlier comments about the motivations of different stakeholders in Japan, what they might prioritize, the sacrifices that they might otherwise make in favor of shareholder returns, what's been the experience within the ecosystem for a company like Hitachi that's maybe been a little bit more forward in that regard, given that they exist within this broader ecosystem within Japan?
One thing with Hitachi is, the last 5 years, it's really gone noticed, the change, if you look at the stock price. But if you ask them, this has been a 15-year journey. It wasn't something overnight where they got a new CEO and they decided to get rid of half the business and cut customer relationships. It was something gradual. Even with Hitachi machinery, they're spinning this out, but gradually they started with half and they'll work their way down. So it won't happen overnight. It might not be a huge press release, but you talk to the companies, you notice the gradual change and just the direction of where things are going. And you also think about, are they willing? Some companies have the namesake brand. They don't want to exit a certain market. With Hitachi, one investor asked, like, are you willing to exit consumer appliances overall? And I said, yeah, we probably will, because it's not a great business. We're not well positioned there. And yeah, despite it being our brand and where we have great heritage in, we're willing to do that. So I think just the timeline can be different than what we might be used to, but with that long-term perspective.
Okay. Well, I have noticed in our portfolios, we have added a few more Japanese businesses than where we were several years ago. So I know much of our conversation has really painted with a broad brush, but I do appreciate the specific examples of where we're seeing changes. And just last question before you go, Ian, maybe non-investment in your thinking, in your wandering, your best insight from the trip.
I guess in a world of high inflation, I really appreciate the value. One that really stands out is just the dedication everyone there seems to have to what they do. Really, like I said, when employees are at the employer, they're most of their career, they get really, really good at often niche stuff and really go hard at it. And this is across, good, higher end restaurants, 7-Eleven, just the dedication people have to what they're doing. And it's not just monetary based. There's not a tipping culture. They're really focused on doing a great job with a lot of sincerity because they care. And I think for me, trying to do the best I can do in my career, my job, it's inspiring to take that kind of ethos and try and apply it to my life as well.
With sincerity. Thank you for your time.
Thanks, Rob.